First of all, I would like to thank Gulf News and the team for arranging the sessions in a manner wherein it has made my life a little bit easier. So UAE effectively is not catching up someone, but they are leading in terms of granting various initiatives. When Sheetal also talked about in his speech that there are various awareness and guidelines which are issued by the authority, Nirav mentioned about change of mindset, that it's not about embracing the 9% tax, but it's all about compliances which one need to take care. And that's where my today's session is going to revolve around. Everybody said that, especially, yes, Ms. Noor, when she mentioned in her topic about if you don't follow particular provisions of the taxation law, the tax dragon is going to come and bite you, or the authorities are going to be after you. But is it really that authorities are after you? The answer is no. It's a coin with two sides, wherein on one side the government is offering you the benefits, and on the other side there are obligations which you need to comply with. So I am going to talk about what are these obligations which everybody said that if you follow this, you will not be penalized. If you do this, if you maintain discipline in the business, you will not be penalized. As a business, what is it that is expected out of you, so that if you follow those processes, the tax authorities are just going to enhance your business productivity by giving you a support system or an ecosystem. And that is where we got to talk about the evolution of taxation and the regulatory regime in the country, and what as a business it is expected out of us. So if I have to start first, I think way back in 1983, it was the first time when the customs law and the customs duty started being implemented in the country, and the country started seeing the beginning of taxation era, 1983. Suddenly in around 2002, when the notion or the perception that anything and everything can happen in UAE, the government started to think about bringing and implementing AML regulations to provide a better checks in the country. And that was as back as in 2002, where we are seeing that it is getting more stringently implemented now, but the roots goes back to 2002. Then comes excise duty in 2017, while it is not on any and every product, but only selective few products where it is being implemented. But yes, there is an introduction or an implementation of excise duty since 2017. One of the major landmark tax reform that has been implemented, which is in the form of a value-added tax, that's been implemented in 2018. In 2019, we have heard about implementation of economic substance regulations and its requirement to submit the notifications, returns, and other aspects. So 2017 excise, 2018 VAT, 2019 ESR. The list goes on, wherein in 2020 they made it mandatory to submit the UBO related declarations to the tax authorities. Now this is not happening just randomly. There is definitely a process behind it. Globally, the tax governing authorities or the Organization for Economic Cooperation and Development, OECD as the authority, is implementing various initiatives globally, and UAE being a signatory member to that is also reciprocating what is required to be implemented at a global level, and that's where we are seeing all these implementation. I have mentioned that implementation of transfer pricing is from 2022 or 2023, both the years. I'm not sure whether most of you would agree with this, what I have mentioned over here. If a corporate tax law is effective from 1st of June 2023, I repeat, if a corporate tax law is effective from 1st of June 2023, why would there be an implementation or an applicability of transfer pricing from 2022? Because this is going to be extremely critical for the businesses, that as per the corporate tax provision, there is a specific mention in the law and the explanatory guide or a note which has been issued by the Federal Tax Authority. It says that your opening balance sheet in the taxation regime has to be transfer pricing compliant. It means if I am a business who is subject to corporate tax from June 2023, when I open my balance sheet on 1st of June 2023, it has to be transfer pricing compliant. And if I have to open my balance sheet of 1st June 2023 to be a transfer pricing compliant, It means my entire financial year, 2022 to 2023, as the financial year when it gives me a closing balance on the balance sheet date, has to be also transfer pricing compliant. And this applies to every organization, assuming for a moment we have most of the companies which will be following Jan to December as the financial year. So on 1st of January 2024, you have gone live with the corporate tax. All your opening balance as on 1st January 2024, if there are any related party transactions or any related party balances which are outstanding, it has to be transfer pricing compliant. This is specifically covered under the legislation. That's why it is important to note that transfer pricing is something which is in a way going to affect you, is going to be implemented even before the starting or an onset of a corporate tax as far as your business is concerned. So as a business entrepreneur, as a representative for your respective organization, please do ensure that when you start your corporate tax regime, which is, let's say, 1st January 2024 or 1st of June 2023, whenever it is, your opening balances are transfer pricing compliant. This is one thing which you may need to ensure as a robust compliance mechanism. So when everybody said that when you do things right, the penalties are not there. And this is one of the things which you need to ensure that you are doing it right. So coming back to transfer pricing, thereafter implementation of a corporate tax which is effective from 2023. Coming back to after 2023, from 2024 onwards, we will see other implementation of a corporate tax, because if the business is following Jan to December as the financial year, it is going to be applicable to them from 24 onwards. There is already an announcement wherein effective 2025, another initiative of OECD, which is in terms of Pillar 2 initiative, which is applicable to large multinational organizations, is also going to be effective from 2025. And then even next year ahead, 2026, there is going to be an implementation of an e-invoicing mechanism. UAE is already giving all these deadlines and timelines to you, possibly a year or two in advance, for the businesses to be fully prepared. This one thing stands really, really different as far as UAE's commitment to the ease of doing business is concerned, wherein they are not announcing the implementation of a new tax regime or a new initiative just before a month or two. There are enough of months given for the businesses to be prepared. So if I have to talk about the implementation of e-invoicing, which is from 2026, the rollout will happen in 2025. The businesses will get more than a year to be prepared to implement their softwares, and then only you will be going live with the e-invoicing. So giving an advance intimation or an update is going to be extremely critical, and that's how UAE is going to follow this roadmap, which is already been announced in advance. As far as businesses are concerned, what one need to take care is, are you appropriately and adequately considering various tax initiatives or the legislation pronouncements which are issued by the authority? And typical notion is that, okay, when the law was announced in December 2022, we have read the law and we have implemented it. When VAT was announced in 2017, the law was announced and effective 2018, we have read the law and we have implemented. But have you taken care of the subsequent amendment and the changes which has changed the positions on an overall basis? To give you a glimpse of it, from 2018 onwards, if we see, there are more than 370,000 VAT registrants already registered with the tax authority. 3 key pieces of legislations in terms of VAT decree law, executive regulations, and tax procedural law. Decree law has more than 80 articles. Regulations has more than 70 articles. There are more than 15 public guides, 40 public clarifications, hundreds of private clarifications, awareness sessions by the authorities. Various court rulings have been pronounced already. So while you may not be aware about it, but the judicial system has already been in operation as far as taxation related announcements are concerned, and many contentious tax issues have been already settled by the tax authority, and numerous VAT audits have been already conducted by the department to give you a roadmap or a clarity in terms of what next. So this is overall a business is to take care when you talk about your VAT obligation compliances. It's not only reading the act and the rules, it's reading the entire piece of legislation put together. It will help you to comply with your tax obligation. Similarly, if I have to talk about corporate tax, now it is just the beginning or an onset of a corporate tax regime as far as the country is concerned, but what all things you need to consider put together as a business from your success perspective. There are more than 20 chapters in the law, consisting 70 articles, 19 public guides. Mind you, whatever is issued and given in the law, the authorities have done extensive reach out program by way of a public guides and clarifications to tell you what is their intent behind introduction of a particular legislation, so that the possibility of litigation at a future date reduces to the bare minimum possible. And that's why there are 19 public guides, 3 public clarifications so far, 20 plus ministerial decisions, 9 cabinet decisions, 8 FTA decisions, 350 plus FAQs. Now, think of the fact that from a small trader, from a small business person, from a natural person to a large multinational organization, the authorities have given an extensive outreach program wherein they've issued different FAQs at a different section level, at a different segment level, so that you can find out if I am a free zone, what are the questions that I have? There is a section for that. If I am a natural person, what are questions applicable to that? If I am a person looking out for a tax group registration, what is it that I need to take care? Every section has been dealt in detail by the authority by way of FAQs, and that's how the number goes beyond 350. Multiple awareness session, an explanatory guide ranging for more than 150 pages has also been issued to explain every single provision under the law. And this is something which is again very unique as far as UAE is concerned, wherein they have gone beyond what is expected to provide the comfort to the tax payers or the tax registry assessees to ensure that they do not face any surprises at a later date in terms of the penalties. So they are not here to levy the penalties, they are here to guide you to ensure appropriate and correct compliances. So with all of this in place, so many pieces of legislations, guides, clarifications, circulars, everything, ultimately what is expected? What is expected is in the business, as an organization, you have to take care of 4 aspects. And all of this can be summarized into 4 different processes. One is, as we all know, we call it P2P process or a procure to pay process. Whenever you are into your business, one of the key aspects is your processes on your inward side or on your procurement side. The second process is O2C, which is order to cash, wherein on your outward side, what are the changes that you need to do so that you can effectively implement and embrace the tax-related initiatives appropriately. Third is record to return. Whatever records you maintain, whatever books of accounts you maintain, whatever accounting entries you have recorded in your books of accounts, how do you appropriately translate it when it comes to filing your returns are concerned, is going to come in R2R. And there are other processes in terms of onboarding an employee, issuing them offer letters, ensuring what are the perquisites that you are giving to them, what kind of an implication that can happen when you onboard an employee from a tax perspective. All that is also being taken care, where you decide that as an organization, if we want to ensure there is a robust compliance, if we want to demonstrate that we are the best industry practice followers as far as our sector is concerned, these 4 processes, you have to ensure that you master them. Every single sub-steps within these processes, you have to be reasonably certain that each sub-steps is duly complied with the pronouncements of the tax legislation, and there is no violation in your policies and processes. If you are having a policy and process for your employees in terms of mobile phone usage policy, a motor vehicle usage policy, a child education support program, or any other perquisites which are being granted by the organizations, let's say rent-free accommodation, all of these policies and processes will have to marry with the tax-related requirements. If you delink your routine business operations from the tax-related initiatives or the announcements which are already issued by the authority, definitely the authorities are going to come and catch you and levy the penalty. So you cannot run your business in isolation. You have to combine, you have to integrate all these processes with the taxation requirements. If that is done appropriately, there is no way wherein one can levy penalty to you because you are duly complying with your tax obligations. Tax obligation does not necessarily mean that you have to take registrations on time or you have to file your returns on time. It should be evident in every single process within your organization what you follow to demonstrate that yes, you are the organization which is believing in following appropriate compliances, to demonstrate to the authority that we have not done anything hanky-panky as far as our business is concerned. To summarize these 4 processes, effectively we have to talk about 4 elements, what we call it as a PPDT review: people, process, data, and technology. All the 4 elements within your organization has to integrate with the tax-related initiatives which the government has already announced. When you hire any people for your organization, when you design any processes or SOPs for your organization, how do you manage and maintain your data, and how do you embrace the technologies which is duly compliant with the tax law? All the 4 things are going to effectively help you to ensure that there is adequate compliances which is being followed throughout. What does it mean? Effectively, if we have to further get drilled down within this, it effectively means when it comes to data, all your master data has to be captured in a manner wherein your vendor master, your customer master, your item and product master, your pricing master, chart of accounts in your ledger accounts, and everything has to be tax compliant or should take care from a tax perspective. I will say what all things I need to do from a chart of accounts perspective. So let's say from a corporate tax perspective, if your business, as Sheetal was mentioning, that for the startups, most of the organizations are initially at a stage wherein they incur losses and later on they turn into profits. Now, if there are accumulated losses for the past period, when you enter into a tax regime, you need to bifurcate and have a new chart of accounts. Tax losses for the period up to 2024, and let's say from 1st January 24, when you enter into new tax regime, the subsequent tax account losses will have to have a different chart of accounts. From a staff welfare expense perspective or from an employee expense perspective, if at all there are expenses incurred for meal or accommodation or any expenditure incurred for years. So it is not for a preparedness for today. It is for preparing you for the future review by the tax authority. Second is on the invoice front. We have seen that most of the times people are not bothered about the invoices, what the issue or the format or the templates of the invoice. This is going to be extremely critical. Your invoices in terms of your tax invoice, if you are providing an out-of-scope supply, if you are providing export supplies, you are providing exempt supplies, each of the different types of supplies will have a different type of tax invoice format. And any wrong invoice format will entail a penalty of 2,500 dirhams per document. I repeat, as a business, if you do not follow a correct tax templates, the penalties which are prescribed is 2,500 dirhams per incorrect document. And that's where, again, the law is very clear. You just need to follow it. Credit notes also the same way. Contracts. Most of the contracts which were entered into in the past, maybe some of the contracts runs into 2 years contract, 3 years contract, long-term contracts, construction contracts, or all these period infrastructure projects typically run into 3 years to 5 year projects. When these contracts were entered, there was no taxation in the country. And that's why effectively you might find many contracts are not having any taxation clause, which is now being mandated that you need to ensure your contract appropriately talks about the taxation element or a tax clause. Is it inclusive of tax? Is it exclusive of tax? The impact of withholding taxes, if any, who will bear the input tax credit if at all the invoices are not correctly granted. All of these clauses needs to be appropriately captured. And that's where the contracts with vendors, with customers, on your supplies to governments, again, there are exemptions being available, and that's why your contract has to be appropriately drafted for that purpose. Contracts with employees. Many a times we have seen that in the past, the businesses used to provide a managerial remuneration or a salary to the owner or a promoter of the organization without any contracts in place. Now with introduction of a corporate tax and the implication of transfer pricing for connected person, you need to have these contracts in place even with the owners or promoters who are acting as the employees. Whether if they are on a golden visa, are they having appropriate labor permit or a work permit in place? All these small nitty-gritties are going to be considered effectively from a tax perspective to ensure there is a robust compliance within your organization. Obviously, the contracts with the related party will assume significant importance, because when you supply anything to your related parties, are there adequate markups, margins added? What is the logic for that will be again tested by the tax authorities from a transfer pricing perspective. And therefore, when you enter into any related party contracts going forward, please do take care of the tax compliances within that. Compliances. When I talk about compliance, it means right from registrations up to the stage of deregistrations, if any, for the liquidation of an organization. Everywhere you need to ensure that your details with respect to the organization as well as the authorized signatory is duly updated. Many times we observe that the clients do not update the details of trade license which has expired, the details of Emirates ID which has expired, a passport which has expired for someone. And all these details, when you don't update on the portal, but you update with the government authorities, within 20 days, if you don't upload your updated information on the tax portal, there is a penalty of 20,000 dirhams. And that's where you need to ensure all this is duly updated. Recently, the law has been amended from a VAT perspective and tax procedural law perspective, wherein the authorities have said that they have linked various government agencies with the tax authority portal. And now, therefore, you see that when you log into your tax account, if these details are updated by you with the respective authorities, but not updated on the portal, a pop-up or a flash will come on your portal to say that there is a delay and likely to be penalized for delay. And therefore, it is important that all the registrations or other compliances are appropriately done, including filing of your returns on a timely basis and even making payments. If there is an organization which has followed a financial year which is, let's say, July to June or June to May, and it has been incorporated recently, there could be a possibility that you have a tax return filing. I repeat, you have a corporate tax return filing which is due on 30th September 2024 in some of the cases. So please be sure about when is your tax return filing due date in place, because any wrong date could leave you with a penalty for non-filing of corporate tax return. And this is going to be your first corporate tax return. So please be sure about when is your first return due and accordingly take your tax positions. We are very much aware about that the authorities are going to come and review your business operations or possibly start scrutinizing your operations. And therefore, from an audit perspective, you need to ensure there is adequate trail available. You are able to retrieve the data within the 5 working days, which is the most critical requirement as far as authorities audits are concerned. You should be able to give them the data and the information as and when requested. You have to update your tax positions from time to time, as there are multiple clarifications, guides, FAQs are issued. It means if your tax positions are not aligned with the intention which the authorities have communicated, are you adequately and appropriately updating your tax positions as far as business is concerned? Formats, sales register, purchase register, VAT ledger, credit ledger, everything has to be so much in line with the tax authorities' requirement that if it is not, there could be penalty. Most of the businesses are not aware that in 2017, October, I repeat, in 2017, in the month of October, Federal Tax Authority has released a detailed guidebook about how do you have your accounting software in place so that it is tax compliant and it generates the tax compliant output. Many of you would not have such tax compliant software with you, and if the authorities come for an audit or a visit or a review, if the data is not available as per the requirement, there will be a penalty. It is called as FAF file or FTA audit file. If this audit file is not auto-generated from the system in the details which is expected, there could be penalties applicable there as well. So this is where the emphasis is that you need to ensure discipline in your business, ensure the data is correctly recorded, the information is appropriately accounted for, and if you are disciplined in your business, the penalties are not there for you. But you should be aware about the laws of the land and follow it. What is the X factor which will help the businesses in UAE to thrive better? Because in today's world, when everybody talks about artificial intelligence, automation, AI related other softwares in place, are you appropriately embracing those fast-paced technologies as far as your compliances are concerned? Because even if you are not, the tax authorities have already started implementing it. And when the tax authorities catch up faster than you, effectively you will have a slightly bigger problem to worry. And that's where you need to ensure that wherever possible, you effectively infuse a technology into your business which gives you a quick turnaround time, gives you an accurate data as and when requested. The data should be reliable, and lastly, it should be cost effective. And that's how one need to ensure that is there any way wherein you can reduce the cost of your operations, cost of compliance, at the same time increase the dependency on the outcome. How could you achieve that? Possibly the answer is embrace the technology. As we speak, even if you scroll on the FTA portal, they have listed down various software technology service providers who are approved by the FTA authority from a VAT perspective. We believe very soon they will start updating the list from a corporate tax perspective as well. And what all you could do from a tax perspective or from a corporate tax perspective, maybe find out a technology solution which gives you a tax return computation on an automated basis, or a technology which helps you to prepare or consolidate your financials, which is required from a tax grouping perspective, or read your financials from a PDF to upload it in the Excel format so that you could file your returns appropriately. Anything that can help you to reduce your time and cost, but at the same time increase your efficiency and accuracy of your tax compliance, is something which will give you an X factor, and this will help you to remain with you even beyond more than a year or 2 years or 5 years, so that employees may keep coming and going. But this kind of a technology, if it is implemented or imbibed into your organization, it will always remain with you. So look out for the automation in place so that effectively the organization says that whenever there is a need, we are ready to support the audit or the review whenever initiated by the tax authority. So these are some of the pointers which we would like to highlight, that from a business perspective, what all one need to do. Is it only the registration and filing returns or filing payment challans? The answer is no. It is about working on each and every single process of your organization, right from filing or giving an appointment letter or an offer letter to your employees, dealing with the owners and promoters to give them the payment back in terms of dividends or share of profits. Anything that you could think of has to have a tax element imbibed into it before you move on further there. So this is something which I would like to put it across, that as an organization, you need to ensure there is a robust compliance available within the organization so that you could avoid penalties and ensure a peaceful sleep on an ongoing basis, because the tax initiatives and the regulatory changes are bound to happen. As we are in 2024, we have already seen the roadmap up to 2026, and there could be any more initiatives will be added as we move forward. So the initiatives will not stop, the compliances will not stop. What we need to do is catching up with it so that the compliances within the organization is duly taken care. Thank you so much.